Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 24th of February, 2021, 5:15 a.m. Central Time. I am early. Lucky me. I have a favor to ask of you all. If you like these videos, would you hit like on your YouTube page? It'll help me get more viewers. It's not a lot to ask for you. A lot of you come every single day. Just hit like. I'd really appreciate that. The next thing, if you want to know my special offerings, just go to our website, www.iraepstein.com. Now let's get into the meat of the market. GameStop went crazy at the end of the day. And I mean bananas. The market doubled in value from roughly $45 to $90 during the day on the firing of the chief financial officer, or resignation, I think that's the better word. And they're bringing in more board members under that Chewy gentleman that was in that company, and they're doing more. Okay, that's a big rally, doubling. That's 100%. That ain't nothing. In the aftermarket, the market went to $200. So, Congress, you know they're watching it. You know, I've been around this game, and the smart people don't try to do things to get the government mad at you. I don't say that taking the stock from 45 to 200 is going to get them mad. I think it's going to get them crazy mad. And that doesn't mean that anything's been done wrong, but if you thought look-see was taking place, it's more going to be than that at this point. Another good piece of news, though, that came out, Moderna's got another level to be tested of its vaccine. Now it's going after the South African variant, and it's ready to test that. So you're seeing the monetization, that's the word to remember, of these vaccines. Moderna's really doing it by coming up with variants, because we know that COVID keeps mutating. Isn't it similar to what we get each year for the flu? Duh. Not hard to see that. In the stock market, well, you can see where we reopened tonight, so don't get all nutty with what you saw or what you're seeing going on in GME. I covered it, by the way, in my Spider ETF video already. But do watch what's going on, because commodities are on fire. It's that simple. The Fed chair, Powell, spoke today in front of the House and did nothing more than to say, by the way, in the currency market, they're really looking at a digital currency for the U.S. They're studying everything about it in a big way. It's, I guess, on the front burner. So that's good news. But is it really bullish for Bitcoin and others? I don't know. First of all, I don't understand why Bitcoin just runs here when all it is a value speculation class. That's what I read it at. I understand why it's running with the millennials. I understand there's only going to be 21 million of these. But at the end of the day, if there's only going to be 21 million, tell me the other uses. Well, and I know everybody's trying to make it a barter digital currency, but what's going to really happen is you're going to have a digital currency sooner rather than later from governments. Now what do you do with those others? That's all I'm saying. Not going beyond that. In the S&P 500, you're up for the week 0.5 percentage point, 2 days left. Market coming up, going for the all-time high, so nothing has changed there. We're not quite at that all-time high. You're in a resistance area. I mean, if you even have basic charting behind you, you can see that when a market does this and slips like it did, and you start coming back up, you're into a resistance area. Okay, where's the swing lines? Well, the last swing line high, let's take a look at it, was right here, and that number's 39.36 in the S&P. Market breaks down, starts coming back. It has not taken that number out. So you still have the pattern of lower highs, lower lows, bearish. Now you have to filter it. I use moving averages to filter it. And if the market is over the 18-day average of closes, I say the bias is up. When the swing line is down and the bias is up, I say you have nothing. I say the market fell back to what I call that line in the sand, fought a battle, 3 days running now. I don't know where it'll be tomorrow, but it's still 3 days running. Today's the fourth day, don't know what it'll do. I take a look at Bollinger Bands. Let's assume the market picks up and takes that number out, that 39.36, then 39.75.5 roughly. That's the resistance point. If the market falls back right now without taking that number out, 38.87 is the support, but not a buy number for those that want to be bullish because the swing line is down. So it's got nothing really going there. And momentum, if you take a look, well, it's overbought. Not trying to embed. To embed, you got to get both numbers over 80 and keep them there several days in a row. So what do I see in the market? I see confusion. That simple. When I look at the NASDAQ, boy, do I feel good yesterday. And literally in my morning paid subscribers screaming at people, you got to be out of all shorts. Said this is your first challenge of a lower Bollinger Band since November. I'd have to stand back there to show it to you. I don't care what it does. That's where the market's likely going to find a lot of support. And after the fact, if you take a look, when it hit it yesterday, that number was, is it 1308? Yep. And now you take a look where you're at, 13,308 for all purposes. Pretty good move. Where's the resistance? All the way back here, and you're still in a very bearish pattern. This market is not bearish. It is bearish. It's different than the S&P. 13,526 is the resistance, and no, I'm not saying it's got light risk in it. You'd have to get over 13,729, this high, to break that pattern. Could it turn the market bullish? No. You can break the bear pattern by getting up there, but you cannot turn bullish because the pattern would then be a lower low, higher high. Momentum, flattening, but not turning up. Bears still fully in control. The Dow is different. The Dow kept the most bullish of the indicators I have. And I said, in the hierarchy, the slow stochastic is number one. I recorded, by the way, for my enhanced Bollinger Band stochastics course, another one of the videos today. I might get one more done this evening. Then I'll have maybe 5 left and I'm done with the course. It's really coming along. We have a higher high, lower and low. You can see where the market battle is. It's the 18-day average. The bulls are in control. When you're embedded, you're not worried what the swing line's doing. It's when red line closes under 79 that I'd want you out of the market. Prior to that, I'm looking for the potential of another challenge of the upper Bollinger Band. You've already hit today a window envelope that was important. I know I don't show you the window envelopes here. There'd be so many lines on the chart, and if you haven't taken my charting course, you're not going to get it. Take the charting course, sign up to be a paid subscriber, $7.95. Come on. And it'll all start making sense to you, and you'll see what I'm getting at. So as we come over to the Russell's like the others. You fought the battle at the 18-day average. You first put in lower highs, lower lows, got down there. You're overbought again, not trending. You have the higher high, lower low. I said this morning that the market still feels heavy to me in most of the indices. I haven't left that. You have to clear this resistance zone and prove that you can stay up. Then I can say, okay, it's gotten through the heaviness. But when you come down like you've been doing, you come back into this area, that's the resistance area now in the market. We'll see if the market can do anything about that. In the VIX, well, with the break that you've had already, will this market break any further? We keep seeing that it doesn't want to go down and take out these lows. So respect that. Don't think you're getting back to the 15 level. Respect the fact that 20, that general area, is a very important zone. The market is not in a trend to trade here. You have a pattern of higher lows, higher highs, and you're under the 18-day average. You got a lot of nothing. On the way up, I thought, and I said here, I expected resistance between the 18 and the 100-day average, and you have it. This is a hard son of a gun market right here. As we come to the T-bond market, I'm still very much in the bear camp. I don't know where the market will bottom. Here's what I tell you. This is that gorilla glue trade. It's when a market every day practically hits that lower band, and the rallies to the right-hand side, they're there, but they're very They're very small. Now, we'll see tomorrow if it can do it. Eventually, it breaks away and you get that sideways action. And from that, you have to make a decision, or the market does. You have to be lucky enough and smart enough to know how to read the chart. Which way is it going to go after that sideways action? I don't see that happening yet, though. When I come to the 10-year notes, fully embedded reading, bearish. Little more breath here. Now, today was one of these days where I outsmarted myself. I had told traders that key moving average in the morning that I looked at, I saw it was being hit. But when it was being hit, you lost the embedded reading. When you're losing an embedded reading, I'm never a hero, ever, during the day to say it's lost. I will wait to that last part of the trading day, a long way into it, sometimes the last 3-4 minutes. And that would have proven smart. It didn't lose it, but it didn't offer me the opportunities I was looking for. I can live with that. Rules are meant to be there to protect you, not to hurt you. So do they work all the time? No, but if they work most of the time, you should be happy with them. That's why they're called trading disciplines. In the dollar index, you have a bearish market, or do you? No. You have a market that we can see it's made lower lows. We can see it's fighting the zone in the market right now. The pattern is one of a higher high, lower low. That is not a trend. The bias is down and you are oversold. We have both numbers finally in the slow stochastic under 20, but it's the first day. I don't know where it's going to open tonight. If it's just steady, it'll be on the day 2 that it's trying to get the embedded reading. You need at least 3 days. Then we take on a whole different way to trade the market. In the euro, did the market even try today to embed? No. Just staying overbought. And tonight, both numbers over 80. But this is tonight. You're 30 minutes into trade. Who knows what you're going to do? The pattern. Higher high, lower low. Now this change is bullish if this happens. We take a look at today's high at 121.79.5. We already have a pattern of, follow my finger, a higher high and a lower low. If you take out today's high, that would give you then what this pattern looks like. Higher lows and the higher high, bullish. Then, unless you stepped back and took out the low of today, which was Wednesday at 121.13.5, you'd have the uptrend in place. Maybe you develop the embedded reading. Then the 122.07 level becomes your next target. So you got setups developing. I don't see them having occurred. In the British pound, I'm starting to see that momentum's slightly pulling back. Okay, you got to 142.45. I think ultimately it's going higher than that, but nothing has to go in a straight line. I'm the crazy bull in this market, and I'm telling you, this could easily get a pullback at any time. You're riding the upper Bollinger Band. Again, it's that gorilla glue trade. Every day you hit it, you don't get any break of any size to come in. And when they give you the break, now it might be a little late. I'll be watching the trade tonight. I can promise you that. I'm still very friendly in that market. Bitcoin, I think the pros are short. I can't believe I said that. I think that they're short with stops over that high, not for a guy like me, but you lost the embedded reading. It's staying lost. You generally try to make a run at the 18-day average of closes. It's against the trend of the market. It's caused a slow stochastic trade. When I say the pros, it could be the computers, whatever. We'll see if that's right or wrong. You know, this market now counts on Elon Musk. Whatever he says is going to move that market. And Kathy Woods, obviously, she's got the millennials in the ETFs and the individual stocks. That's going on. It's fascinating what goes on. In the slow stochastics, fully embedded, is there any reason to be bearish in crude? Zero. Lose the reading, then we'll talk that. Till it happens, still looking for higher prices here. Same in the WTI, and I know prices are relatively high. It doesn't matter. All that matters to me is the chart action. Nobody's calling me on the phone and giving me the fundamentals anyways. Heating oil, same thing. I see that. But when you get to nat gas, I'm not stupid. I do realize that it's 50 degrees already in Texas, if not more. I'm looking out my window in Chicago. We're in the 40s. We still have plenty of snow that is melting. If it stays like this into next week, we'll have no snow left. Now, we can get more snow in March, but we can also hit 70 in the Midwest in March. I know very well. I've lived here most of my life. So in seeing that, understand you're breaking some of these patterns. Now the question is, what happens here? So again, if you like what I've done for you here, please hit that like. I'd appreciate it. If you want to see our free information, go to our website at www.iraepstein.com, my name. You'll see the free offers, and away you go. Have a good day.